View on the Market, a practical view of today's financial markets. Unlock the potential of your portfolio performance by maximizing your investments. Learn how mutual funds, exchange-traded funds, and real estate investments can create diversification. View on the Market starts now.
Welcome to View on the Market. I'm your host, Jeff Zayas. Today we're covering direct investment in the real estate market, and we have a special guest, Adiel Gorel from International Capital Group. ICG has developed a successful formula for real estate investing, and Adiel has agreed to sit with us today and kind of go through that a little bit. So let's bring in Adiel from ICG. All right, Adiel, you're on.
Hi there. How you doing? It's nice to be here with you, Jeff.
Well, thank you. It's a pleasure. This is our first kind of. Hopefully, we'll have many more of these. So, can you tell me a little bit of what's ICG and what does it do?
Okay, I'm going to give you a little bit of history. I mean, my own background as an individual is I am a Silicon Valley product. I went to school there, I taught there, and I was working as an electrical engineer at Hewlett-Packard Labs and at a startup. But my company back home, my family rather, was always involved in real estate on a large scale. So from an early age, I sort of heard a lot of real estate talk in my household. When I started working at Hewlett-Packard more than 30 years ago, I wanted to start investing in something so that my salary won't just go to waste, to build something. Because of my real estate background, naturally, that was the first place I looked. And I saw certain features that real estate in the United States has that many countries in the world don't have, which Americans take for granted, but blew my mind. And by the way, to this day are blowing the mind of many people worldwide when I speak about it. And I started investing in real estate right in Palo Alto, where I used to live in Silicon Valley. Very quickly, I saw that the numbers weren't very friendly to an investor vis-a-vis rents and prices. Back then, in the 1980s, the unwritten rule was you only buy real estate where you live. I said, why is this rule there? I was young, single, willing to travel, and I said, let me look for a place where I can find better deals. The first cities that I really liked was Las Vegas, which is about an hour and a half flight from where I was living. But the same house I was buying in Silicon Valley for $150,000 that could rent for $700 a month, I was buying in Vegas back then for $38,000, and it could rent for $400 a month. That was much, much better. Started going to Vegas every weekend, developed a team of people that I liked, that I trusted, and in my first year, I ended up buying a couple of dozen homes in Vegas. While I was doing it, many of my Silicon Valley associates, friends said, we would like to be involved in this as well. And since you have all these team and property managers managing your property and realtors that know what you're looking for, we want to work with you. So pretty soon I was leading a group of maybe 20 Silicon Valley engineers. And as a group, we ended up buying about 250 homes in Vegas over a period of about 3 years, not really buying them as a group, buying them individually, but the group power played very nicely because all the service providers, the property managers, the realtors, care more about you when you're a very large client. So when Vegas started going up in 1987, we kept what we had bought, but we moved to buy in another city, in Portland, which was very cheap, very low. And in the end of 1988, the entire Northwest, including Portland, went up like crazy. That was the big boom that we had here in California. So we kept what we had bought and moved. By that time, I formalized it. I formed our company, ICG, where the premise is always the same. We go to cities where we consider them to be the good cities to buy in the US. We set up an organization with property managers, with realtors, with repair crews, escrow people, lenders. And I come in usually as the biggest buyer because I love buying real estate. I think it's the best thing to do. And many of our real estate investors come in worldwide and from California, New York, etc., and they buy, as well. So we've been doing it now for nearly 30 years. And just in Phoenix, we bought more than 3,000 houses, and overall maybe 10,000 for ourselves, for people. But the premise is to buy, hold for a certain amount of time, and liquidate when it makes sense to liquidate.
So would it be a fair characterization? You kind of developed a co-op of buyers to kind of go into a city and then or an area and leverage what you already existing developed. So you have developed relationships with real estate brokers and possibly lenders and things like that, and property managers, and you bring that team to other people so they can invest as well. Is that kind of how it works?
Not really a co-op. I would take it, it's really the other way around. We go into a city, we interview and get referrals and do due diligence on professionals such as property managers, because you can't buy a property in another city without having a good property management team. Property managers, more than one team if the market is really large, like a Phoenix. Realtors who know what we are looking for. I wrote a couple of books on it, so we know what we are looking for. Repair crews, escrow people, etc. Then we have the infrastructure. Now we give them business and test them. If we don't like what we see, we change the parts until we like what we see. Then we give them our own business and the business of our close friends. Then we open up to all of our investors in California, in the US and worldwide, to use the same infrastructure, because we become a large service provider, a large customer provider for them. They care more about our investors, and we carry a bigger clout, so to speak, which every investor we have enjoys. So if we bought 1,000 homes in Orlando and somebody from San Francisco buys one home, they still enjoy the clout as if they bought 1,000 homes.
Well, so I'm an individual investor. I would buy the house. Would I contract with you guys, or would you just set up all the buyers and sellers basically?
We connect you directly to our team. In fact, my very strong recommendation is that people actually travel to the markets and meet with the realtors, look at the properties, understand, meet with the property managers. To facilitate it a little bit, our company has a big event once every quarter near the San Francisco airport. And I believe you went to the last event, Jeff, if I'm not mistaken. We bring in many of the market teams to speak, to interact with the people, for people to get to know them. We bring in experts. So our next event is on March the 16th. And of course, Jeff, you and your listeners are invited. This is a paid event, but Jeff, I'm telling you right now that anybody who comes from your listeners, all I need is their names and they can come in as my personal guests.
Well, thank you so much. So how many properties does ICG currently hold?
ICG owns a few hundred properties. Of course, in order to give you an exact answer, I'll have to do an inventory. But of course, we are smart. We hold them in different entities and companies, and they're not a single member, which people should know. In fact, that's an issue that most investors need to learn about. And that's why, actually, I'm sorry that I hark back to the event on the 16th. I'm bringing an expert, a lawyer, in this exact subject, asset protection, which, by the way, you may want to have on your show because it's an important issue. So we've bought hundreds of properties over the years, but our investors have bought close to 10,000 properties.
And I had another question, which just went right through my head. Well, it has to do with today's marketplace. I mean, isn't this, with the real estate market, the way it stands today in certain areas, poised with the interest rates, that how they stand, don't you think that this is a unique opportunity, once in a lifetime opportunity for people who have, say, $80,000 to $1,000 or more to invest in real estate? This would be a fine time to kind of get into it.
Well, actually, a couple of comments, if you don't mind, Jeff.
No, please do.
Number one, I do agree that we are speaking here on the 16th of January, 2013. This is a good time. In some ways, if we were speaking on January the 16th, 2012, in some ways it would have even been a better time, because we already are showing signs of appreciation and improvement in some of the markets. Let me give you an example. these days you still want to buy and enjoy the fruits of the recession. You want to get the deals that the recession are there. There are four states that really manifest the recession in its most powerful way. Those are the states of California, Nevada, Arizona, and Florida. I like to buy in large metropolitan areas for the economic diversity, employment diversity. In California, the large metropolitan areas are expensive. They were expensive even through the recession, but now they're even more expensive. In addition, in California, the landlord laws are not very friendly to the landlord. They should call them the tenant laws. Actually, they call them the landlord-tenant laws. And so we are not buying in California much. And also the state of California is mired in some difficulties financially, as you know very well. Right. Yeah. So there are three states really where I think in 2013 you want to buy. And those are Nevada, Arizona, and Florida. Now, why am I not mentioning favorite states, which I love very much, like Texas and Oklahoma? I love them. They're great states. They're stable. And that's the downfall. They're stable. So right now, we're still trying to buy the bargains that came from the recession. And in Texas, we don't get them in the same way because it is more stable. So the thing about Phoenix, Arizona, for example, I don't know if you know it, Jeff, but in the last year, Phoenix appreciated 34%. The media says 28, but the ASU, Arizona State University, business school of real estate says 34. That's a much more,
realistic number,
reliable source.
Right.
So in Phoenix, Arizona, it's become almost impossible to buy. Many of the hedge funds are now buying, en masse. So when you can get something in Phoenix, by all means, do go ahead and get it. In Vegas, also in the better location, it's becoming harder to buy. So Florida, while becoming more competitive as well, for example, Blackstone, a giant hedge fund, came into Tampa with $1 billion in cash to buy single-family homes. But Florida still provides very good deal flow. So I would say in Orlando, in Jacksonville, in Tampa, to a secondary extent in Miami, although there you really need to know what you're doing, there's a very good deal flow there. Jeff, I can also connect you, and if your listeners want to, that deal flow. My numerous teams in the various markets send us properties that they have handpicked from 100, they usually pick 3 or 4. I get those. Now, I don't send them to my entire database, which is really vast. I send them to a list, which I call our quick send list, people who want to see the properties as they come. Jeff, if you or your listeners want to join our quick send list, all you need to do is send us an email at info at icgre.com. And in the subject line, just say, send me properties. We will add you to the list and you'll start seeing the deals as they come from the various marketplaces. And you'll see that Phoenix is now underrepresented because it's much harder to find properties.
So this you're a clearinghouse of sorts for information to get to hook up the buyer and the seller. And I take it on the seller side, it's probably banks, right? Banks that are not getting rid of toxic loans, but those properties that were underwater or whatever, and they have to release them. They have to do something with them, and you have set up an organization to take advantage of that and have all the groundwork done at that ground level, and then the property managers and whatever teams to fix the property up. And you probably have some kind of formula for, what's the return on investment for the money flow coming in. So,
yes. So, absolutely. The sources that are selling are primarily banks, as you said, Jeff. The U.S. government, such as Fannie Mae, the Veterans Administration, they sell properties they took back in foreclosures as well. There are some flippers who sell properties. There are local handymen who might buy properties and repair them. We just look at the end result. If the numbers work, if it's a deal, if it's a bargain. I never thought that I would buy properties for much less than the bare construction costs. And yet here we are buying properties for 75, 50, percent of the cost to build them. That is crazy, and that is wonderful. One comment that I must make is, Jeff, you mentioned before about somebody that might have, 80,000, 100,000. If you don't mind, I'd like to talk for about a minute or two on loans that many investors can get.
Please do. The floor is yours.
Okay, so if you don't mind, I'm going to take a little sip. Here is how it goes. Many investors don't think that they can get loans to buy investment properties. That is not true. If your credit is decent, and I'm not going to define decent now, it's probably starting in the sixes or something like this. You have a steady job, you're just a regular borrower, you can get up to 4 loans as an investor on residential properties, and those are 20% down. Very, very attractive rates, of course, nowadays. And I recommend that you get a 30-year fixed rate loan. By the way, getting a 30-year fixed rate loan in 2013 is doing something very powerful for your future. Because if you get a loan, even as an investor, which is a little higher than a homeowner, so let's say it's 4.75 or 4.5, that's ridiculously low. If you get a 30-year fixed rate loan, do you know what it's going to look like in a decade? It's going to look like a joke.
Right.
It's a fantastic. And it's, the inflation is just going to eat it down. So you can get loans up to 4 residential properties, including your own home. But between 5 and 10, you can also get loans, except instead of 20% down, it's now 25 to 30% down. Still very good loans. So up to 10 properties, many investors can get loans and they don't know it. So that person with the 100,000 in cash now doesn't have to buy 1 property necessarily. They could buy 3. Maybe 4.
And I take it you have lenders that understand this, that work in that environment that you can actually kind of push buyers towards. I know you had a Wells Fargo gentleman at your last conference that was tuned into that kind of purchasing. So when is your next conference again? And can you one more time give your
Absolutely.
Email address, how people can contact you? And,
Absolutely. So our next event is on Saturday, March the 16th. It's an all-day, event, and people can fly in, and they do fly in from all over, the country. We start at 10 a.m. We end at 6:30, and in fact, the Wells Fargo lender will be there, and he can make loans. If you can get a loan, he can make it for you. That's an aggressive group within Wells Fargo that's very well tuned to the investor and work hand in hand with us and all our teams. And like I said, there's going to be a lawyer, an expert in protecting your assets, which is very key. It's going to be on Saturday, March the 16th. By the way, there's going to be another lawyer, I'm sorry, that is a genius level lawyer who is fighting the lenders in court day in and day out. And to listen to him, you really know what's going on nationwide, not from the media, but from the trenches. He's unbelievable and should be listened to. And it's at the South San Francisco Conference Center. It's right by the San Francisco, airport. All the details you can see on our website, which is, ICGRE.com, ICGRE. And if you want to come, since I made the invitation to Jeff's listeners, all you need to do is send us an email, once again, to info@icgre.com and say, I'm a listener of Jeff's, and here are the people. You can even bring your friends.
It would be, I'm a listener of View on the Market, but yeah, if you're a listener, if anyone listens to me, what the heck, right? So
we like to have large rooms, so you can bring your friends. Just send me an email with the list of names. We will put you on, the attendee list. You can come. I'm sure you're going to find it extremely beneficial.
Well, thank you so much, sir, for sharing some insights. I think it's an interesting prospect of, investing directly in it, and that's why they call it real estate. It's real. And if you can do it through an organization that allows you to, kind of does the research, helps you understand what you're getting into, and also, hooks you into a group of people that you're going to get a higher level of service from. That's a win-win situation, and everyone should have real estate in their portfolio because it only goes up if you buy at the right time. So
if you buy low, everybody says you want to buy low and sell high, but the behavior, many cases is they buy high and sell low. So interestingly, while we were in 2010, 11, 12, a lot of people were on the sidelines. Now it's starting, to go up and people are jumping in. I still think that 2013, very possibly 14 are still phenomenal years.
Right.
I can't see further than that now.
Yeah, I think I personally agree with you. I think all signs are markets are improving, but there are, now they can get rid of more toxic loans, so there will be more inventory for, coming into the marketplace, which is, hopefully a good thing. And as long as it's done in a, not open up the floodgates, but done in a way that will, stagger it throughout the year, I think people can benefit from it. But thank you so much for having this interview, and perhaps we can do another one in the future. Again, my name is Jeff Zayas with View on the Market, and we just finished up with Adiel Gorel from ICG, and we'll see you later.
Thank you very much, Jeff.
Thank you.
Bye.
This program is for educational purposes only. The opinions expressed are not intended to be and should not be considered financial advice. Viewers are encouraged to consult with their financial advisors, tax preparers, or other professional advisors to evaluate their personal circumstances.